This is Invested in Climate with Jason Rissman. I see climate as the world's biggest, most diverse, most important movement in human history. Millions of people dedicate themselves every day to protecting the planet. This podcast shares conversations with advocates, entrepreneurs, investors, policy experts, and anyone else that can push our thinking about what's possible and what needs to happen to address climate change. If you have ideas for episodes or feedback, get in touch on LinkedIn. If you enjoy the show, please leave a rating on Apple or Spotify. I'm currently building a new venture. It's related to storytelling and how we engage all sorts of folks in meaningful climate action. If you have expertise in this area, big ideas, or examples of something that's really working, get in touch. Thanks for listening and for doing whatever it is you're doing to support climate progress. Okay, let's get started.
When I go to name your favorite awesome university or business school and I go talk to those students, those rooms are packed. And it's not me, it's just the space that we're in. It's excitement about realizing that you have an opportunity, a special place in history to actually do something massively impactful with all of this great education that you've been given. And maybe 5 years ago, maybe 25 years ago, that wasn't actually possible. And today it is. And so I think the smartest and most talented entrepreneurs see that and take advantage of it and want in. That's a game changer.
Hi, folks. What 2025 will bring for climate tech is pretty hard to predict. We've seen a slowdown in investments at the same time as we see a continued flood of talent into the space, maturing technologies, and a boom in AI that could be transformative for climate solution. The new administration, nobody really knows how they'll orient around climate tech or how private investors will respond. There's a lot of uncertainty, but of course, pros that have been in this game for decades and who study early-stage climate tech closely have some ideas of where we're headed. So I was thrilled to get to catch up with Andrew Beebe, Managing Director of Obvious Ventures. We spoke about Andrew's background as an entrepreneur and the parallels he sees between the early days of the internet and climate tech. We talked about where climate tech is today, 5 predictions he has for 2025, generative science, technologies he's most excited about, what needs to change to really address the climate crisis, and more. Andrew brings the nuance and clarity of someone who's been working closely with energy and climate entrepreneurs every day for a long time. We didn't solve all the mysteries of what this year will bring, but I think Andrew shared some great food for thought and some real opportunities. Andrew, great to see you. Welcome to Invested in Climate.
Thanks for having me, Jason. Great to be here.
Well, very good to reconnect after several years. We are now just at the start of 2025. I hope you had great holidays and are feeling energized for this new year. You've put out some predictions for the year, and we'll definitely want to hear about those. First, though, let's set the stage and learn a bit about you. You are an entrepreneur turned investor that's been focused on climate for quite a while now. Tell us briefly about your background.
Sure. It has been a minute since I got my start in climate. Actually, in the Wayback Machine, I was an internet entrepreneur in the late 90s. And I was an entrepreneur during a period when there were not that many people focused on the internet. And I have subsequently seen a lot of cycles since then that feel very similar, where back in the day, there's a true story. I had a startup in the late 90s. I went up and down Sand Hill Road and told people about this thing called the internet. And those storied investors would say things to me like, Andrew, no one will ever put their credit card on that thing. So those were early days, but they quickly, obviously accelerated. And I see some very similar trends happening with climate and with artificial intelligence, where there were no funds focused on the internet. Then every fund on Sand Hill Road was suddenly an internet fund. And then every fund went back and just became a fund again. I think we're seeing the same cycles play out where we get excited about a new trend line and then build an entire industry around it and then realize that it's actually just part of the fabric of the global economy. And we get back to being sort of core investors who care about, it used to be digitization and now it's decarbonization, and AI will be layered on top of all that. So after I did that in the late 90s, I got very excited about the next wave that I saw coming, which was really more about clean energy and abundant, low-cost clean energy, which at the time, basically none of those three things existed and certainly didn't exist together. I think our company, Energy Innovations, was the first, probably one of the first, or if not the first, solar company that was venture backed in a traditional wave of clean tech 1.0. And had a lot of fun building that company with Bill Gross and a team down at Idea Lab in Southern California. We sold that company in 2008 to Suntech and worked on the global stage of large scale solar manufacturing and sales, and ended up in my last year there running global revenue for the business, became the largest solar company in the world, and sold $3.5 billion worth of solar in the last year, which was pretty exciting. Probably over my tenure sold more like 5 or 6 billion. But we really went from having a dream about getting below $1 a watt to, when I left the company, really wildly exceeding my expectations and the expectations, I think, of the rest of the leadership team there, being closer to 50 cents a watt. When we started, we had no idea how we were going to get there. And when I left, I thought that was sort of the end of the cost curve. Now, I think everybody realizes the costs of solar panels today are probably around 10 cents per watt. And of course, they're more efficient, and the balance of plant is thus commensurately, not at the exact same rate, but come down a lot in cost. And so I think it's just a tribute to what an entire industry can do when everybody sets their mind to a singular goal. And we're seeing it across the climate world today with storage and other areas. And I'm excited about how that's going to play out in things like geothermal and fission and other areas.
Amazing. Well, really excited, especially for this long-term view that you have and that you've been there and done that and seen cycles in various industries. And definitely we see some fluctuations in climate right now. So we'll be very interested in your perspective. Now you are the managing director at Obvious Ventures. Tell us a bit about Obvious and what makes the firm unique.
I had known my partners for a long time. Vishal Vasish, one of the founders of the firm, was at Patagonia for a decade as the chief strategy officer there. The other founder, James Joaquin, was a longtime venture capitalist and internet entrepreneur like me back in the late 90s. And then finally, Ed Williams, founder of Twitter, who I had known in the late 90s when he was just founding Blogger. The three of them founded Obvious about 11 years ago. And their view then, and our strong view, I think a firm view now, is that if we found mission-driven founders, we should find people who were trying to transform the biggest parts of the global economy. And if you do that in a resilient and long-term way, you should also find outsized returns. And that actually was sort of a contrarian view back then, that was like a trade. You had to have concessionary investing if you were really going to change the world. And we just didn't see it that way. I know the founders of Intel and Fairchild Semiconductor and Google and others certainly didn't see it that way. And in fact, they set about to change the world, and they did. And NVIDIA and others now today are doing the same thing. And so that was our humble thesis. We're 10 years in, or 11, close to 11 years in. And we have invested in over 100 companies. We've had, I think, probably a half dozen IPOs and something like 20 plus substantial acquisitions of those companies. And many of them really are trying to take on big parts of the global economy and make it cleaner, safer, more resilient, and just better. The companies we wished existed in the world. And I lead our planetary health efforts. We also focus on economic health and human health. And we think that those three big pillars, and they've proven over 10 years and 4 funds to be really resilient in terms of providing great opportunities for early stage investment. And that's what we do, seed and A investing. We are usually pretty active investors, board members, lead deals, and love to roll up our sleeves and work with founders. And we've been in their shoes. So I think that aligns us oftentimes with what they're trying to do. And sometimes the historical perspective of being in a space for 20 years can help. Sometimes it can be a hindrance. So we try to be humble about that as well. But I do think that that perspective, at least as operators, is really important to the founders we work with.
Right. Let's dig deeper into that historical perspective and really trying to understand this moment in time and where we're at. And as we've just heard, you've been working in climate tech now for well over 20 years. You've seen some ups and downs and different cycles. How would you define this particular moment?
Well, I do think, as they say, history may not repeat itself, but it certainly rhymes. And I think it is worth looking back and seeing what we can learn from the past, and also recognizing that I'm sure this time in some ways is different. I would draw a couple of contrasts to the clean tech 1.0 era. And first and foremost, the motivations of every human on the planet are more aligned and aware than they were 15, 20 years ago. When I started, climate change was like a thermostat setting. That wasn't a thing. Al Gore's movie had not come out. I was literally, I realized when I was watching it for the first time, I was in the audience for one of the filmings of it. And I had been in my job in solar for a couple of years. And so Those were really, really early days, and it just didn't connect viscerally with people the way it does today. And of course, tragically, we see it every day. But in the last week in Los Angeles, we had just yet another painful wake up call, as if we need any more. So I do think that the awareness globally at the political level, at the corporate and commercial level, and of course, just at the human or consumer level is entirely different. That has driven other actions, such as the existence of much more regulatory support and dollars. Some of it is direct subsidies from around the world, but much of it is not. I mean, I just was reading this morning about Bureau of Land Management really releasing finally some awesome expedited capabilities for people to look for geothermal resources underground. And that's a really big deal. This could cut development cycles in half and at least shave a year off of exploratory wells, another year off of full drilling. These are big moves that don't really cost the government any money. It will save a lot of people money, and it's going to expedite the process. So we have great awareness from consumers, from everyone. We have great awareness and action at the political level and financial level. But then dollars in terms of investment have really started to flow. So when I was an entrepreneur, just like when I went up and down Sand Hill Road pitching the internet, when I was pitching solar, people said to me, famous, like very well-known VCs would say, Andrew, would you please just go do like a mobile gaming company? Because we'll go back you for that. But we're never going to do solar. And I won't name the names, but one of them was a Nobel laureate who was a venture capitalist and famously, like a year later, poured a bunch of money into one of our competitors. Didn't work out for them, but they went and did a number of different solar deals. So I think when you hear that from investors as an entrepreneur, you should know, okay, you're probably onto something. And I think that wave has really happened again. People have first pushed back and said, what's really happening here? Now the money is flowing in. It's flowing in at early stage firms like Obvious, but it's also flowing in at massive infrastructure companies like a BlackRock or Temasek or anyone, or et cetera. And that's because a lot of the work we did in the first wave was people like to point out that there weren't massive venture exits. It was massive progress in terms of wind and solar and batteries and mobility and electric mobility. And those things now are just low risk, low yield products, but they work. And so the infrastructure dollars love that kind of flow. And thus we're seeing billions and billions, I mean, really trillions at this point of dollars coming in to the later stages. None of that existed when I was an entrepreneur. And then the last thing I would just say is that I can say this because I was one of them back then, but the quality of entrepreneurs is just so much better. We have both volume and depth in terms of when I go to name your favorite awesome university or business school and I go talk to those students, those rooms are packed. And it's not me, it's just the space that we're in. It's excitement about realizing that you have an opportunity, a special place in history to actually do something massively impactful with all of this great education that you've been given. And maybe 5 years ago, maybe 25 years ago, that wasn't actually possible. And today it is. And so I think the smartest and most talented entrepreneurs see that and take advantage of it and want in. That's a game changer because without them, you really don't get the breakthrough.
It's great to be reminded of this long-term view and really compare where we're at to a decade or decades ago. The last few years, though, have made some people start to wonder, right? Is that we've seen a decline in climate venture investment, and some folks are wondering if climate tech is in real trouble. Investments fell for the third consecutive year, both in terms of the number of deals and dollars deployed in 2024. And investment last year was less than 1/3 what it was in 2021. How do you see the shift in investor interest?
Yeah, I think we should think carefully about the implications of those numbers. When you see something decline, maybe the immediate reaction is that's bad, it's declining. I probably have a different view, which is that I think there was some bubblish behavior around the passage of the climate bill in the US in particular, and perhaps inflation or irrational exuberance regarding the immediacy of the outcomes. In other words, there was a sense, I think, that people are going through with AI right now, which is, hey, if it has these words attached to it, it's just a win. This is a gold rush. And it's really all you gotta do is be in it to win it and spray and pray. I think it can be a luck strategy in the short term for some people in some industries. It's not a real strategy and it's not a long-term strategy. And in venture, we are long-term players. Early stage venture, we are expecting our companies to return extraordinary outcomes, but not in 2 years, but more like 7 or 10 years. And in some cases, some of the highest value companies in the world today have been at it for 15 plus years, and they're still not public or liquid. So I think that we just had a little bit of an irrational boost over the last preceding couple of years. And now I would say we're coming back to a more rational position. I think another data set that's important to sort of mash up against the important numbers that you just shared is how much capital is coming into climate venture from limited partners. And that number is very large. It's larger than it was 4 years ago. So we have this, I don't know if they're colliding, but certainly interesting numbers converging, which is the amount being deployed has come down and the amount coming into the system has gone up. I think that's great. It just means that managers of that money are being a lot more selective. They're doing what they're supposed to do, which is take 3 to 4 years to deploy that capital rather than 1 to 2, which has happened in the blockchain or crypto bubble. It happened a little bit in the climate bubble. So my hope is, I think we're going to see some carnage. I think there will be headlines that say, oh, look, it's clean tech 2.0. And we really have to just push through that and say, come on, folks, like there are bubbles and bursts all the time. The question is the macro real? Are there real opportunities? And have there been real exits? And the answer to all of those is yes, yes, and yes. So I think we do have to ride through this next period, which I think is just getting to the headline stage. And of course, with the administration change in Washington, I think it'll be even easier. We'll have hearings and we'll say that these government loans were bad ideas, and there'll be echoes to Solyndra and other things. And that's okay. We just don't have to cower from that. We can just point out that these things are much, much bigger than little blips on the screen.
You were somewhat prescient in anticipating my next question, which was how you see things evolving this year. Do you think this trend of a decline in investment will continue in 2025 amidst the changes the Trump administration will bring? Or do you think that climate tech investor interest will rebound a bit?
Predicting the year in Washington is a little bit of a fool's errand. I'm not going to try to predict exactly what the administration will do with regard to civic subsidies and support that the government federally has offered. However, I do think that as investors, we will always point out to our investors, our limited partners, our funds are 2 to 3 administration terms, presidential terms in length. The idea that we would change a thesis or that an LP would constrain the flow of dollars just because of a 4-year period here, I think is a little bit foolish as well. So I do think you're going to see an increased constraint or a decreasing deployment of capital. And I think we'll see some companies go out of business. If that's related to a hydrogen tax credit or something going away, I'd be really surprised. I think some of them might use that as air cover. Hey, the subsidy went away, therefore we're finished. I actually think a lot of those companies that were so dependent on that kind of subsidy, as an example, weren't really destined for long-term success in the first place. So what people use for air cover or not, I don't really know. But we're an investor in Zanskar, which is a geothermal company using artificial intelligence to find geothermal much more quickly, because that's really what kills the cost of geothermal today. And all of these permitting reforms, which Biden's administration very carefully orchestrated, set up, and have been executing against, I think those are going to be handed over to the next administration and carried on. Those people would love to see the same reforms for transmission lines. I also think many of them for geothermal and for oil and gas. And so there's a lot of shared interest there in building out a grid infrastructure to just make America more capable in terms of its scaling of our grid resources, which the last administration desperately wanted and was prosecuting against. And I think the next one wants as well. So I think there's going to be puts and takes, Jason, is the simple answer. And I don't think this is like lights out or anything like that. I mean, the thing about climate is that if you politically want to push against it or deny it or something, which I think is pretty uncommon these days, you're just more wrong every day. Like literally every single day, you just sort of look dumber and dumber. I think that we will see cracks in the Republican Party's view of climate. I think many of them care deeply about the issue, and many of them who haven't yet said that publicly are looking for ways to do that. And that will help ease this transition so that it just becomes what it should have always been, which is just a very bipartisan issue. And then we can debate the best tactics to solve it.
Andrew, alongside the decline in climate tech investing, there's been a big spike in AI investing. And of course, some of this interest in AI will have a real impact on climate, both in terms of the energy demands as well as in powering new solutions. And I know that Obvious is particularly interested in generative science. What is generative science and the impact you see it having on climate?
A year ago, my partner and one of the founders of the firm, James Joaquin, really articulated a great view of what's world positive about artificial intelligence. And it's a little bit like asking what's world positive about the internet, what's world positive about electricity. And yet it has to be asked, and we really have to more deeply understand it. And for us, that's important because it leads to where do we want to invest in this category? We are not looking to invest in artificial intelligence for surveillance or police actions. And some people might make the case that that's world positive. We're more interested in where artificial intelligence pushes the boundaries of what's possible, particularly scientifically. And that's what he coined the phrase generative science, just instead of generative intelligence. And we think that the easiest way to think about it is in an applied sense. When you think about human biology or battery chemistry or the design of a fusion containment vessel, all of these things are very, very complex. Modeling protein folding and thinking about mRNA combinations for disease mitigation. These are so hard to do with software, and artificial intelligence and generative AI, where you're using large science models instead of large language models, we believe is pushing the envelope of the human potential for what we can achieve as humans and what's truly possible. So we articulated that view publicly. We wrote about this. It's on our website and in our World Positive report. And then a few months later, as you know, the Nobel Prize was awarded to two computer scientists, or two different prizes were awarded to computer scientists for the first time ever. Computer scientists have never received a Nobel Prize. And it was because of their work in artificial intelligence. And I think that that is applied to different domains of science, chemistry and physics, I think. That's a tribute to this idea of the potential for generative science. My favorite example, I think, came a couple of months after that when Microsoft announced that their researchers using their AI platforms had found novel chemistry for batteries that humans had not conceived of in combination. And I think I'm actually looking at a startup right now that's using that exact principle to help other researchers do the same with battery chemistry. We'll do the same with materials, but we'll also do the same with things like how we might design a fusion reactor. Fusion reactors are so challenging because you have to build them to really figure out if your design was remotely close. And just like we've done with fluid dynamics and software modeling, we should be able to work on things like containment vessel designs using artificial intelligence. And Zanskar, our geothermal company, is a great example of this too, taking massive amounts of data in and then building basically a treasure map of right now the entire Western United States to be able to determine where are the big pools of heat underground. It's been so hard to figure that out without drilling very expensive wells that geothermal has really remained I think it's 0.25% of the total grid of the US, and it should be something like 20%. That's really because we just can't find it in big enough consistent resources. And that's what Zanskar is doing with AI. So I just think that this overlay of artificial intelligence on climate, just like the overlay of LLMs across and agentic AI across a lot of different categories, it's just a massive turbo boost to the entire industry.
Andrew, AI was one of 5 predictions that you made around the climate tech this year. You also focused on clean energy, batteries, agriculture, and carbon removal. Let's do a lightning round, just running through the 5 predictions, and then we'll spend a little bit more time double clicking on a couple of them.
Yeah, sure. I mean, let's see, from most controversial to least, at least in my own ranking, I think the voluntary carbon markets are one of those things that I can't tell you the catalyst that is going to cause them to actually kick into gear. I can only tell you that we need them to kick into gear. And that's not like wishing a market into existence. It's more that I know we don't solve the problem without using market mechanisms like carbon trading, or I would say carbon removal credit trading, which is very specifically, I think, what needs to happen. And there's so many great people working on this. We're investors in a company called Senken in Berlin, which is a platform for the trading of carbon removal credits. But there are many, many others. And there are people doing it on the ground like Pachama, and there are people doing the certification of these credits like B0 and Silvera and others. And I think that ecosystem is starting to kick into gear and prove to people that we can have reliability and authentication within that platform or that market. That's one that I probably am very hopeful about, and I am least sure of its kicking into gear in this year. Next up in that same kind of vein would be decarbonization of agriculture. There are a bunch of chunky sectors that would be really great, like maritime, transit or fuels, aviation, obviously, cement and industry, and ag being sort of its own version of industry today, that are big chunks of the carbon wheel that need to be decarbonized. And luckily with ag, it needs to be, but it also can be. We are always excited and obvious about being one step ahead, not being 10 steps ahead. Being 10 steps ahead is sort of easy. Like you can talk about flying cars and you can talk about space travel and you can talk about fusion. I read a lot of science fiction. I know some fantastical ideas, but predicting exactly when those things are going to happen, that's where venture dollars turn into great returns. And so being one step ahead, I think, is super important. And I think ag is at that tipping point where we've seen Haber-Bosch is this extraordinary process that's transformed humanity, maybe one of its most important inventions. And yet we can upgrade it. We can give it a 2.0 that basically decarbonizes it while allowing for the fertilization of so much land. And there are a number of companies that I'm really excited about. We're not invested in any, which are doing exactly that, decarbonizing the different pieces of the fertilizer pie. And I think that this should be the year that some of those can really take off. Some of them are literally just effectively electrifying that process. Others are using biological solutions. I think there's a lot of fun stuff going on there. Next up, batteries. I think this is an area I'm not sure we will invest in because we get nervous about some of the commodity natures of that product. But I think we are likely to see some real breakthroughs in solid state batteries. And maybe this is the year where we end the year no longer concerned about two things when it comes to, as an example, electric mobility, or at least passenger vehicles. We're no longer concerned about range and we're no longer concerned about cost. And for me, that's something like most cars coming off the line have close to a 400-mile range. And most cars coming off the line, the battery is no longer 50% of the cost of goods of that vehicle. And I think both of those are possible. They don't even necessarily need that much breakthrough. In the solar industry, we use this, it's got a lot of different names, but the manufacturing cost reduction curve or learning curve. A lot of people called it Swanson's law after Dick Swanson. But with every doubling of cumulative production, you have a 20% reduction in cost. We actually beat that in solar, but it's hard because you need a doubling of cumulative. So it gets very, very big as an industry. But when you're scaling to change every kind of motor or engine on the planet to an electric motor, every engine to an electric motor, I think this is what happens. And so we may just see that learning curve make all this stuff happen. We have other things like charge time and charging availability, other challenges, but I think that is going to be very, very exciting. And then clean baseload power. When I got to Obvious, I said to my partners after 15 years in the solar industry, hey, I just don't think we need to play in that space anymore because we've done so much so successfully on the energy front. We should step away from power generation. And in fact, I was right for about 8 years of my time at Obvious. Then I was pretty wrong. I think a couple of years ago, we spent a lot of time with the hyperscalers, and we know a lot of people who are the demand engines of that large scale power need at the utility level and elsewhere. And we started getting the signals that, hey, we're not wind and solar, even plus storage just isn't enough. And it's not fast enough and it's not localized enough. We need to get bigger, faster. And that's when we turned back to nuclear fission and we turned to geothermal. And I just think there's a ton more to be done there. And that includes what I call gridlock, just sort of getting rid of the challenges of getting power onto the grid, over the grid, and then off the grid. There are many multi-billion-dollar companies to be built in each of those categories.
You've mentioned Zanskar as one of your investments in the geothermal space. Who else have you invested in? What else are you looking to invest in the coming years?
So that's the only geothermal company that we've invested in. I am big fans of Fervo, and we've looked at other companies that have focused on much deeper well drilling. I think there's probably a few categories. One is there stuff we can do to increase the rate of discovery and lower the cost of discovery? Stuff we can do to lower the cost of exploitation of resources, and then stuff we could do to find, or rather basically invent new resources, like much deeper that, we couldn't access today. We chose the first one, which is just lowering the cost of finding the resources, because we felt like it was going to be software driven, highly scalable. It would work with all the other ones. So I think that may be it for us in the geothermal space. We'll see. But an area that I'm really excited about for the country, and I hope that I can get excited about it as an investor, is nuclear fission. I'm not convinced we need radical innovation there. I think we just need deployment. And there are a number of companies like Elemental and the nuclear company and others who are just focused on ways to speed deployment. I worked at NextEra Energy after my time in the solar industry. We ran many nuclear facilities. They have great expertise in that domain. So I'm not convinced that it has to be startups that do this. It may just be large leaders like Constellation and NextEra, but in some form, there's going to be a lot of value created in the world of nuclear fission. I put nuclear fusion a little bit beyond the horizon of what's appropriate for venture capital today. I'm sure that will change maybe in the next couple of years, but right now we think it's just a little bit too far out.
Andrew, many have pointed to misalignments in the climate tech capital stack. There's the missing middle critique, creating a valley of death for ventures that are having trouble finding follow-on capital to scale their companies. There's also concerns about not having enough capital for going to first-of-kind technology or for hard-to-abate sectors or low-income countries. Do you think about these concerns, and how do you think about them? I imagine the missing middle concern could be most relevant to your portfolio, especially with less money coming into climate tech. Are these problems getting worse, or how do you think about them improving over time?
Yeah, those are a lot of different holes and challenges for the capital stack. It's sort of vertical, but also horizontal. I would say we're very focused on investing in the United States. I'm very sympathetic to and very interested in emerging markets and the opportunities there. In fact, that is where some of the greatest delta lives in terms of improvement. I wish we could do more there, but we have really decided to focus on our knitting and we know what we're really good at. And frankly, I'm just not convinced we add enough value in those markets. So I hope that players really can show up there and take on that level of venture or add venture in capital for sure, because it's challenging, but I'm sure the rewards will be great. With regard to the capital stack, and we're very early stage investors, I think that some of this critique about the missing middle is fair. There's two things going on. One, some companies should not get funded at the next stage and shouldn't exist. They should effectively go out of business or be acquired. That's just the tough reality of what happens in venture capital in every single sector. There were periods in fintech where everything was getting funded and many of them should not have been. Then it was sort of a reckoning. And I think we're probably going to see that. So some of those people will say, oh, if only there was first of a kind financing or something, we'd be fine. I'm not convinced that's true 100% of the time, but it's true some of the time. That said, there are Series B investors. There are later stage investors who can be generalists. Some of them are actually sector specific. I mean, I think of like Activate Capital and G2VP, who I think are both incredible investors, and they're there for that missing middle. They are the middle. And then there are companies like in Europe, Giant Ventures has a mid-stage climate only or climate specific fund. And there are dollars there. I think maybe what people really mean is there's not as much of a construct for, hey, we're a Series B company with zero revenue. And that was intentional because we have to build our big mechanical direct air capture removal technology at scale before anyone believes that it really works. And that's the risk we want you to take. That is very hard. And it's maybe, I've heard it sort of compared to drug discovery, where you sort of go through these phases and you could raise $2 billion and go public before you really know if the drug is going to get into market, before you have any revenue at all. And so maybe there's some comparison to that. Of course, many of those drugs can do that because the payoff is so big. It's like a guaranteed 20 billion, could be larger. And so we have to prove that in those cases, that this technology, this moat and differentiation and this opportunity is just that big. And the margins can be commensurate to bring profit, not just top line. And I do think that that is a really tough combination. If we're missing that, the capital is going to show up. I think there are plenty of creative solutions out there to help those companies get through. And when I look at my friend Matteo Jaramillo, who runs Form Energy, we're not invested, but that is a company that has raised a huge amount of money without really getting into commercial operations. And they're going to get there and they're going to prove it. And the payoff may be absolutely gargantuan. They made it happen. And that was extraordinary leadership by their founder and CEO. But it was also the fact that the market recognize the opportunity. And I think we'll see that a lot more. Commonwealth Fusion is another great example of that. So to say that it doesn't exist, I mean, we have proof points all over the place that in fact the capital is there.
Andrew, as you mentioned, you focus on early stage ventures. What advice do you have for early stage founders, given the changing landscape and the opportunities and challenges these founders will face today?
Well, first and foremost, I'm sure this is obvious to all of them these days, but let's show the pathway to how we are not reliant on subsidies, particularly federal subsidies that are tenuous in terms of their strength of support politically. There may be some bridges or some boosters or something that come with that, but that's one that we spend a lot. I mean, that makes for a quick pass in our case. As an example, I'm not focused at all on the hydrogen side of the picture because I believe so much of that is driven by subsidies, which are tenuous in their long-term viability. Second, so many of my other pieces of advice are things that I would say to anyone starting a early stage startup in almost any category. We look a lot at the sort of the wheel of team, timing, tech, and TAM, sometimes traction if you're like a Series A. And the reality is that timing is pretty tough to figure out. Tech often changes. Really, to us, comes down to team and TAM. At Obvious in particular, team is really about the CEO. And we don't want to back teams where we think the CEO might be a great person for the next year, but then we're going to have to find somebody else. That's just not in our DNA. That's not who we are. It's not who we were as founders. Some firms do that. We don't do that. And we look at the rest of the team and care deeply about their values when they come in. And that values alignment with us is important. That team is for sure the number one thing that we care about. And then number two is the TAM. And TAMs are tricky in climate because some of them are crystal clear and absolutely massive if you were in the passenger vehicle world or something, or aviation. And then some of them are emergent. I made a number of investments in EV fleet management software. The first time I did this amply, the market, I said to my partners, this is a $0 trillion TAM. I think it's going to be big at some point, and here's why. But today it doesn't exist. And that company was sold for a lot of money to BP within 2 years of founding. And that was unexpectedly short-term return, and it was great. We then later invested in Synop, which is doing some similar things with a bigger footprint, a different sort of business model, but they now have a real market, and that market is pretty measurable, and you can see its forecast. So it doesn't have to be a TAM that exists today, but it does have to be math that we believe in when we do it ourselves to say this is going to be monster in size if these three miracles can take place. So team and TAM, making sure that you really know what that is. I saw an incredible team a year or two ago focused on solar panel recycling. And I just didn't believe that TAM was going to be big enough to create a multi-billion-dollar company. Some venture firms can still make those economics work if they're going to be small, but they come in at the right price. We can't do that. We really look for, can this company return the fund?
Andrew, I appreciate you zooming out and zooming in throughout this episode and helping us really understand both the big picture and making it tangible. Let's end by zooming way out. You've been working to address climate through early stage ventures now for over 2 decades. You've written that the transition to clean energy is accelerating and have talked here about the transformative potential of generative science and other technologies. What's not going according to plan that you think we need to really address urgently?
Well, I love that Gates quote where he said, we always overestimate what we can do in 2 years and underestimate what we can do in 10 years. And so that gives me great optimism, but across the board, we're not doing things fast enough. I think anything we can do, there are actually many, many things we can do to accelerate. So examples are distributed generation just doesn't need as much permitting. It doesn't need as much support or sort of aggregation of large scale capital to get it out there. That is a way to speed the transition. And we could do that around the world. In places like India, getting more and more distributed generation online would really help speed things along. I think the permitting, subsidy support, charging networks for EV will speed that up. I think radically reducing permitting challenges. Our governor here in California just did a blanket waiver for environmental permitting for the rebuilding in Los Angeles. That will have a massive impact on how quickly that city, that region can recover. I would love to see the same thing happen for things like building out zero emission, zero pollution sites like geothermal in California, helping to fast track CEQA permitting. All of those things can just make it go faster and faster. So to me, there's a lot of innovation that I would love to see happen in magical battery technologies that allow us to get to electric aviation and electrified marine transit, things like that. We should keep trying that. And we can do the same thing on things like ocean air carbon capture or geologic hydrogen. But that's like wishing for innovation. I hope that happens. The one thing I know that we can do is speed things up. And the people, particularly in the Department of Energy and EPA and Jigger Shaw's team and Jennifer Granholm's team, have just done heroic, extraordinary work to help speed things up. I really hope that the next administration can at least find places of common ground where they can do the same thing to help us just scale faster.
Andrew, thank you so much for your time today. All the best of luck with Work It Obvious.
Thank you, Jason. Great to talk to you.
Thanks for joining us for this episode of Invested in Climate. Please remember to rate us on Apple, Spotify, or Google. Find show notes, sign up for updates, get in touch, and visualize your climate action at investedinclimate.com. This podcast is for informational and entertainment purposes only and does not constitute financial, accounting, or legal advice. Thanks again.